welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Buy low, sell high is great advice, if only the market would cooperate for once. Analysts say the fundamentals are strong. Perfect, so would dinosaurs. If politicians were honest, press conferences would be 6 seconds long. If your attention span lasts longer than a reel, congratulations, you're vintage. The world keeps telling me to grow up, but honestly, have they seen adults?
Who would have guessed that the quietest player in the room would end up leading the race? While Uber and Ola have been circling the same ceiling for years, Rapido has gone up from a very tiny blip to a full-blown breakout, riding straight past both like they were stuck in traffic. This is classic disruption. Do one thing, do it well, and do it at the exact moment customers are fed up with the old model. Rapido doesn't need to outmuscle the giants. It just needed to be faster, cheaper, and built for India's real mobility problem. As Victor Hugo said, there is nothing more powerful than an idea whose time has come. This Financial Times graphic says something very simple. While the world talks about innovation, China is busy industrializing it, scaling it, and exporting it. In every direction, from R&D spending and high-tech manufacturing to EVs, photovoltaics, and robotics, the curves don't just rise, they tilt upward. And that's a real story. China isn't chasing the frontier anymore, it's building it. More R&D institutions, more engineers, more patents, and a manufacturing engine that now treats high-tech like a mass market commodity. India's latest FDI equity inflow, about $4.2 billion in September 2025, looks stable on the surface, but zoom out, and the 5-year trend line tells a tougher story. Steady drift downward. Not a crash, not a crisis, just the economic equivalent of a slow leak that you keep meaning to fix. And that's why the next parliament session matters. A few targeted reforms, simpler rules, faster clearances, clearer tax policy could turn this from a gentle decline into a genuine recovery. Because right now India isn't losing investors, it's just not winning the new ones fast enough. India's per capita income might sit just above $2,400, but that number hides more than it claims. Strip out just the top two cohorts, about 82 million of the richest Indian citizens, and the average for everyone else collapses below $1,150. Remove the urban emerging group too, and the bottom 90% are closer to $900 a year. So this isn't a single consumer market. It's 9 stacked economies living side by side, with affordability measured not in rupees, but in hours of work. A meal, a smartphone, a subscription, minutes for some, days for others. And that's a real takeaway. National averages are telling the story of the thin crust, not the Indian middle. As Mark Twain once said, there are lies, damn lies, and statistics. This 10-year sector heat map proves one thing. Nothing in markets stays in the same place for too long. Metals, real estate, IT, energy, every sector takes its turn as hero and villain. Top one year, bottom the next. It's less like a ranking table and more like musical chairs with volatility. Look closer. Energy was dead last in 2020, then a superstar in 2022. Real estate soared in 2017, collapsed in 2020, and then climbed back again. IT glowed in 2018 and sulked in 2022. That's a real market. Chaotic, rotational, and beautifully unpredictable. The lesson? Don't chase last year's winners. Don't panic over last year's losers. Diversification and discipline beats prediction every single cycle. 1.78 lakh crores. That's how much India's public sector banks earned in FY25, their highest profit ever, and up 26% from last year. And the momentum isn't slowing. The latest quarter added another 49,456 crores. The story behind the numbers is even bigger. This is one of India's most dramatic financial turnarounds. PSU banks, once written off as slow and NPA ridden, are now growing credit faster than private banks for the first time in over a decade. Bad loans have also fallen from 9.1% to 2.6%, and capital buffers are strong at 16%. This chart shows a turning point in internet history. The moment AI-generated content overtook human-written articles. It's not a trickle, it's a tidal wave that began right after ChatGPT launched. And now more than half of everything we read online is synthetic. And that's where the real risk begins. The four horsemen of infocalypse, imposter accounts, weak moderation, mainstream extremism, and hyperscale synthetic content don't just distort information, they also erode trust. And once trust collapses, the entire information economy breaks down with it. AI isn't the villain, but unchecked AI absolutely can be. This chart really does look like an India shining moment. Non-Nifty 50 companies, the broad middle of corporate India, are quietly powering the next leg of growth. Sales are recovering, earnings have jumped, and net profit has hit a brand new peak of 1.81 trillion rupees. What's striking is that this isn't driven by banks or commodities alone. Even when you strip out both, the profit curve still rises. That means the upswing is broad-based, manufacturing, services, mid-caps all pulling their weight. Earnings growth had its turbulence, but the profit trend is unmistakable and now decisively upward.